Well, safety is the first thing that we are trying to focus on. We like a return of money versus on money, it seems like in this environment. But there's still plenty of great places to invest. You just have to be picky and a little bit wary and a little bit understanding of where you think the market might go this fall.
And where do you think it will go this fall, Dory?
You know, I think it's going to have a sideways to downward bias. We've got pressure coming from the UK. There's nothing positive that's going to come out of there until Brexit. And the market hates uncertainty. We know that. And all we know is it's going to get more uncertain through October. On China, same way. You look over the weekend, we've had 1,100 people, over 1,100 people arrested so far in Hong Kong. That situation is going to get worse before it gets better. The trade situation is going to get worse before it gets better. So that's going to have a downward bias through the fall as well. In addition to, we seem to have some negative numbers coming on the economy as far as global uncertainty. Manufacturing's down, GDP's down, slight inversion of the yield curve. We've got a priced-in cut on rates. So there's enough downward bias here to make sure that you need to pick and choose where you want to be hiding out right now, which I think right now, you know, blue chip stocks with the yield is a better place to be than probably the bond market.
You know, Jim Cramer said so. We were in Hong Kong a couple of weeks ago. We understand the tariff story, right? A direct impact on the U.S. consumer. Do you believe the unrest, the images, the disturbing images coming from Hong Kong are impacting the U.S. markets in some way?
I don't think the Hong Kong factor has been factored in yet. I think that's been very underrated, and that's going to play into Trump's hands because as this turns violent, that's going to make it very difficult for people like Nike and these companies to come and pressure Trump. He's going to say, well, go change your supply lines. This is a communist country, and they have a human rights issue. This is also going to play into world sentiment on our side as well, and it'll make it very difficult for political opposition against Trump. So I think all this is playing into his favor and should work out pretty good.
You know, we're going to talk about gold a bit later on in the show, Dory. Are you one of these people that is buying gold, finding gold as a relative safe haven, maybe buying treasuries with a yield at 1.48% on the 10-year? Somebody's buying.
You know, gold has always been a trade for me that's sort of like a end of the world type trade. You know, let's buy this in case everything gets really bad. The problem is, how do you get out and what do you do with it? But gold also should be a hedge against inflation, right? And I'm not seeing a lot of inflation out there, so no, I'm not buying gold right now.
Would you buy stocks ahead of an expected Fed rate cut in September?
Yes, absolutely. I think a lot of these look really well. I like AT&T right here. Their numbers have come out really well. They're pushing a really nice yield of 6%. They've reduced their debt from $180 billion down to $169 billion. They're on target for $150 billion. Their new content coming out this spring. The acquisition's going very well, and they've got very little exposure to China. Nice yield, nice company. I feel good about Walmart and Target. Those are momentum plays. They're not necessarily cheap, but they're both doing very well. And I still love the banks right here. There's a lot of them with really, really good yields. And you can move into the regionals. You know, a Regions looks good. A Key Bank looks really good. You can move into PacWest, which has got a 7% yield. Nice bank there. Texas, Cullen/Frost is a nice yield and nice forward earnings multiple on some of these banks.